Welcome to Wise and Wealthcraft. With rising interest rates, unemployment numbers, and slowing GDP growth, today we're delving deep into a topic that's both timely and essential: economic recessions. In a world where financial stability can be disrupted, understanding economic recessions is not just a smart move, it's a necessity. We're going to walk you through the ins and outs of economic recessions. What exactly are they? What causes them? And how can you not only survive but potentially thrive during these challenging times? We've got a lot to cover, from financial survival tips to investment strategies, entrepreneurship, and even real estate insights. By the end of this journey, you'll have a well-rounded understanding of how to navigate economic recessions successfully. So, if you're ready to equip yourself with the knowledge and strategies needed to thrive during economic downturns, hit that like button, subscribe to our channel, and let's get started. To effectively navigate economic recessions, it's crucial to start with a solid understanding of what they are and how they work. An economic recession is a significant decline in economic activity that lasts for an extended period. It's marked by a decrease in GDP, rising unemployment, and a general economic slowdown. Recessions can be triggered by various factors, from financial crises and sharp declines in consumer spending to external shocks like natural disasters or geopolitical events. To put this into perspective, let's take a quick look at some of the major recessions in history and what caused them. The Great Depression of the 1930s is one of the most infamous recessions. It was triggered by the Wall Street crash of 1929 and characterized by massive unemployment and economic hardship. In the 1970s, the oil crisis caused a significant recession. Soaring oil prices and supply disruptions led to stagflation, a challenging combination of high inflation and high unemployment. The early 2000s saw the burst of the dot-com bubble, resulting in the 2001 recession. This recession was driven by the collapse of overvalued tech stocks. The 2008 financial crisis, caused by the housing market collapse and banking sector turmoil, led to a severe global recession. It had far-reaching consequences on the world economy. Each of these recessions had unique causes and impacts. Learning from history can help us better prepare for and navigate economic downturns. Recessions can bring about financial uncertainty, but with the right strategies, you can weather the storm and emerge stronger. Let's start with some key steps you can take to secure your financial future during a recession. First and foremost, create a detailed budget. Understand your expenses, cut unnecessary costs, and prioritize essential spending. A well-structured budget is your roadmap to financial stability. Second, focus on reducing high-interest debts. Paying down credit card balances and loans can free up valuable resources during tough economic times. Third, establish or strengthen your emergency fund. Having 3 to 6 months' worth of living expenses saved can provide a crucial safety net in case of unexpected financial setbacks. Fourth, review your investments and consider reallocating assets. A diversified portfolio with a mix of assets can help protect your investments. Now we're going to delve into investment strategies that can help you not only preserve your assets, but potentially grow them during a recession. Recessions can create unique opportunities for savvy investors who understand how to navigate the financial markets. Let's start with some defensive investment strategies to protect your assets. Defensive stocks belong to industries that tend to be less sensitive to economic downturns. Think about sectors like healthcare, utilities, and consumer staples. Bonds, particularly government bonds, can be a safe haven during recessions. They provide a fixed income stream and are considered less risky. Precious metals like gold and silver have historically been seen as stores of value during economic turmoil. Real estate investment trusts, REITs, can offer diversification and income potential, even during recessions. Dividend stocks, especially those from stable companies, can provide a consistent income stream that may be less affected by market volatility. Recessions can be a testing ground for entrepreneurs and small business owners, but they can also be a breeding ground for innovation and opportunity. Let's begin by highlighting the resilience of entrepreneurs who not only survive, but thrive during recessions. During economic downturns, businesses that adapt and innovate can find new avenues for growth. Think about how technology and e-commerce have flourished in recent recessions. Recessions can create opportunities for startups to disrupt traditional industries. We'll explore examples of companies that were born during economic downturns. Let's take a closer look at some case studies of businesses that not only survived, but flourished during past recessions. Microsoft during the 1973 to 1975 recession. Microsoft was founded during this recession and went on to become one of the world's largest technology companies. General Electric, GE, during the 2008 financial crisis. GE faced financial challenges during the crisis, but used it as an opportunity to restructure and focus on core businesses, ultimately rebounding. Apple during the dot-com bubble burst, early 2000s. While many tech companies struggled, Apple introduced innovative products like the iPod and Mac OS X, contributing to its long-term success. IBM during the Great Depression. IBM's investments in research and development during the Depression laid the foundation for future success. General Motors during World War II. Despite wartime challenges, General Motors adapted its production to support the war effort and emerged stronger post-war. What about real estate? The real estate market is often deeply impacted by recessions, but it can also present unique opportunities for savvy investors. Let's start by discussing some defensive real estate strategies that can help protect your investments. Rental properties, such as residential homes and apartment complexes, can provide a stable income stream during recessions as people still need places to live. Commercial real estate, like office spaces and retail properties, can be diversified investments that offer long-term stability. Real estate investment trusts. REITs can be an accessible way to invest in real estate without owning physical properties. They often provide dividends, which can be attractive during recessions. Some investors seek out distressed properties or foreclosures, taking advantage of lower prices during economic downturns. Value-added investments involve making improvements to properties to increase their value and income potential. Look, what about side hustles and income generation? Side hustles offer a way to diversify your income streams, providing financial security and potentially helping you achieve your goals faster. Let's dive into some side hustle ideas to consider during a recession. Platforms like Upwork, Fiverr, and others offer opportunities for freelancers to offer their skills and services. Starting an online business, whether in e-commerce, digital products, or consulting, can provide flexibility and growth potential. Consider investing in yourself through education and skills development. This can lead to better income opportunities. Side hustles can be a valuable addition to your financial toolkit. But what about specific economic recovery strategies and long-term planning? Economic recovery can be as challenging as the recession itself, but it's also a time of opportunity and growth for those who are prepared. Let's begin by understanding the different stages of economic recovery. In a consumer-led recovery, increased consumer spending drives economic growth. This often follows recessions, driven by demand shocks. In an investment-led recovery, increased business investments stimulate economic growth. Common after financial crises, government policies and stimulus packages can play a significant role in economic recovery. It's crucial to plan for the future during economic recovery. This includes setting clear financial goals and reassessing investment strategies. Throughout this video, we've covered a range of strategies and insights to help you thrive during economic recessions. Now let's distill this knowledge into actionable steps you can take right away. Emergency fund. Start or bolster your emergency fund. Aim for 3 to 6 months worth of living expenses. Budget review. Review your budget and cut non-essential expenses. Redirect these funds to savings and investments. Diversification. Diversify your investments across asset classes, including defensive options like bonds and dividend stocks. Financial education. Invest in financial education. Consider taking courses or reading books on budgeting, investing, and economic cycles. Side hustles. Explore side hustle opportunities to diversify your income streams. Resilience. Maintain a positive mindset and focus on long-term goals. Remember that economic downturns are part of a larger cycle. Navigating a recession requires planning, resilience, and adaptability. With the right strategies and a positive outlook, you can not only survive, but thrive during challenging economic times. We encourage you to take action today. Share your thoughts and experiences in the comments section and let us know which strategies you plan to implement. Don't forget to subscribe to our channel for more valuable insights on wealth and financial success. Thank you for joining us on this journey towards financial wisdom and prosperity. We look forward to accompanying you on your path to financial success. This concludes our video on navigating economic recessions. Stay tuned for more valuable content from Wise and Wealthcraft.